Good morning, everyone. I'm Kavita here. We'll start the morning call. Yesterday, US markets closed lower with 10-year Treasury yields jumping back to above 4%, with lower expectations of any major rate cuts forecast going forward. As of now, with good jobs data, the FOMC is expected on a path of 25 bips cuts for now. A few of Fed Reserve officials are also expected to speak in the coming days, offering some monetary policy cues. Most Asian stocks are also trading down following the US markets. Chinese markets have, however, vastly outperformed their peers, rising sharply as trade resumed after a week, reacting to major stimulus measures offered by their government. Now, I request the technical team to take the call forward.
Thank you, Kavita. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we are likely to witness some sort of a volatile trading session ahead of the election results. Now, from the last few trading sessions, we are continuously witnessing a profit bookings from almost 26,200 to 24,700 levels. Yesterday, we have seen a great fall, but Nifty managed to close about 24,800 levels, which gives some sort of a relief sign for the today intraday purpose. But if for a today intraday purpose, the support is placed at around first towards at least 24,700. If it manages to respect that level, then only we can witness some sort of a pullback rally from lower levels. If not, then we are likely to witness more selling pressure, which might take a Nifty towards 24,570 to 24,500 levels on the downside. On higher side, 24,870 are the crucial resistance level. We need to keep eye on it. If Nifty manages to quickly break out of that level, then only we can witness some positive move towards 24,940 to 25,100 on the higher sides. So the view is a little bit cautious. We are likely to witness some volatile trading session. Try to avoid some major longs or the shorts. If you have any long or the short positions, maintain with the strict stop losses. Coming towards the bank Nifty, 51,240, 51,500 are the resistance level, whereas the support is placed at around 50,770, 50,540. Coming towards the Fin Nifty, 23,540, 23,670 are the resistance level, whereas the support is placed at around 23,240, 23,100 levels. As of now, we don't have any call opens, or even we are not initiating any pre-markets call. We will just watch out the market for first half an hour, and accordingly we will initiate the call as per the market trend. That's it from my end. I request Nito to take a call for.
Yeah, thank you, Swati. On the derivative front, see, the good sign is that the PCR has come down. It is near the oversold zone at 0.67. So that is a good thing because there are signs where it can probably reverse, which can help the markets move up. The bad thing here is the cost of carry. It is huge at 189. This continues to be at a higher level, which is not sustainable. And unless it comes down, we might not see a big rally in Nifty, probably just sideways moves. Also, we closed below 25,000 levels on the Nifty yesterday, and still the PCR there is above one. So that also suggests, very unlikely that further selling will come in. But yeah, sideways move to continue. At this point of time, we expect Nifty to remain in between 24,900 and about 25,200 odd levels. Not much, from the other data. From the stock specific front, we believe Bank Nifty is near an important support area of 51,000 levels on the futures, and Nifty can probably bounce back from here. Bank Nifty can probably bounce back from here, and we expect Bank Nifty to come up towards that 51,750, 52,000 levels. So yeah, watch out for the same. From the stocks, some short covering can happen in the banking stocks, specifically Federal Bank and HDFC Bank. These are two stocks where we can expect some short covering action to come in. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning, everyone. So there is an update on the Godrej Consumer Products Limited. They announced the business update for the quarter two. The company's standalone business is expected to perform well with high single-digit underlying volume and volume growth. The standalone EBITDA growth will be flat. Company's international business continue to perform well. At a consolidated level, it expects mid-single digit sales growth with mid-single digit EBITDA growth. Consolidated EBITDA growth is expected to be lower. Uh, the This is mainly due to increase in palm input cost in high teens since March, which has not been fully transferred to customers in a one go. The management is more focusing towards the investment in the long term strategies. So this business update is marginally negative. The stock is trading at 47 times to FY26 EPS. Thank you.
Nykaa has given the second quarter business update. On a consolidated level, the net sales value and the revenues are expected to grow in the mid 20s on a Y on Y basis. The company has two divisions. The first one, the beauty and personal care segment, revenue as well as sales value have again grown by the same mid 20s. The GMV growth is even higher. The second business, that is the fashion vertical, NCV growth is seen at around early teens. The company has said that overall fashion industry's consumption has witnessed subdued demand in the first half of this fiscal FY25, but industry is expecting a gradual revival during the second half, driven by the festive and wedding season. Overall, this update is positive for Nykaa.
Good morning. Today, one IPO will be opening. The name of the company is Garuda Construction and Engineering Limited. Details of the IPO are like uh, the public issue consists of offer for sale aggregating up to rupees 90 crores and fresh issue up to rupees 174 crores. Price band is rupees 92 to 95. Market cap post issue will be 884 crores. Talking about the company, Garuda Construction and Engineering is civil construction company specializing in end-to-end civil construction services across various sectors, including residential, commercial, hospitality, industrial, and infrastructure. Established in established in 2010, the company has steadily evolved from handling in-house projects for its promoter group to bidding for external third-party contracts. They manage every aspect of construction, from initial surveys and design to project completion, offering a comprehensive solution that include operations and maintenance, as well as mechanical, electrical, and plumbing services. Talking about the strengths of the company, Garuda's growing order book reflects its strong future performance, with ongoing projects totaling 1,408 crore. Talking about the risks, a company dependent on promoters group company. The company's revenue has relied heavily on the promoter group in the past. The promoter group formed 88% of revenue from historical orders completed by Garuda. And the second risk is previous IPO withdrawal. A prior IPO of the promoter group, PHK Venture Limited, was withdrawn due to undersubscription by QIBs. Despite securing commitment, actual bids from QIBs fell short, leading to the failure of the IPO. This could impact investor confidence and affect the company's future funding plans. Talking about the valuation and recommendations, company demonstrates strong growth with 41% CAGR, revenue CAGR from FY22 to FY24, significantly outperforming its peers. However, its revenue is 154 crores, is much smaller compared to the peers average of 2,373 crores. Although the company boasts a higher EBITDA margin of 32%, far exceeding the peer average of 11%. Its working capital cycle of 218 days are considerably higher than the peer average of 125 days, pointing to liquidity challenges. Its EV to EBITDA of 17.7 times is higher than the peer average of 15 times, suggesting slight overvaluation. Debtor days of 417 also raise concern about collection efficiency. So high dependence on promoter group companies also makes us caution about the company's future. Thus, we recommended neutral rating to the issue. Thank you.
That's all from us. Commodity team can take over. Thank you.
Yes, thank you very much, Kavita. Good morning, everyone. So, in today's session, we are expecting a gap down opening in commodities, and gold can test 75 500 to 75 300 on the downside. So one can buy for a pullback from there with a stop loss of 75 100, and on upside again 75 700 800 one can initiate booking profits. And silver also expected to test 91,000 90,500 on downside. So for a pullback, one can buy with a stop loss of 90,000, and again on upside 91 800 92,000, where one should book profits. Copper also weak below 850. Prices are expected to open gap down, and it is expected to test 840, 845, 840 on the downside. Zinc also one can sell with a stop loss of 288.50, and on downside we are expecting 284. Crude oil witnessed a good rally, but some profit taking expected on downside. 6400 6380 is the level we are expecting to test, and one can initiate a buy around 6380 with a stop loss of 6300. A pullback can witnessed from these levels. And in natural gas, we are expecting prices to test 225 to 20 on the downside. So one can sell around 235 with a strict stop loss of 242. And again on 220, one can initiate a buy for a pullback again till 228 to 30. That's it from us. Thank you very much.